what really is a reversal pattern? So
Okay.
what we have is a change in the price direction of an asset. A reversal can occur to the upside or downside. Following an uptrend, a reversal will be to the downside, and following a downtrend, a reversal will be to the upside. So reversals are based on overall price direction and not typically based on one or two periods bars on a chart. So what is this is simply saying is that a reversal pattern is a sign that we see on the chart whenever there is a tendency for the market to be moving against the prior leading price action. So what do I mean by that? Okay, um, can you see my chart here? So for instance, if we have, hold on a second, let me bring this up here a little bit. So when we have a visual representation of an uptrend, so what is a typical uptrend? Definitely a typical uptrend structure is where we start seeing higher highs
Hello, sir.
and higher lows, something like this. So that is a typical uptrend
Okay.
scenario. And
Okay, sir.
whenever we identify, how do we know that this uptrend is about to change? That is, how do we know if there is going to be a momentum shift in this uptrend? So in this kind of scenario right now, so if we are going to be looking forward to a momentum shift, then we want to be seeing a reversal pattern at the end of the highs. So like I said earlier, we have this is a high here. This is a
Okay.
higher high. This is a higher low. And this is what makes a bullish trend. Now, if we are looking for, if the market is going to change, then definitely we'll start seeing situations where price will start forming. It could be a consolidation phase. It could be a,
Okay.
um, what's it called? It could be selling pressure. It could be a situation where we find ourselves in a supply zone. I hope you know what a supply zone is.
Yes, 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 yes,
All
yes.
right. So when we have higher highs and higher lows like this, we are looking at structures around the supply zone that will be giving us a situation that we might be having a momentum shift. And so what we just
Okay.
read now is that if we get to a peak and we start seeing something like this, well, this is obviously a double top structure. As we can see, we
Yes,
have
sir.
a high here, we have a high here, and then we have another high here. So what this simply tells us is that price was unable to break the previous high, giving us a sign that there is a tendency
Yes,
in that market that will be inciting a momentum shift. And whenever we have something like this is more or less like a reversal pattern that is a double top structure. The next thing we want to be doing is to identify the neckline of that structure. And the neckline will only come at somewhere around here. And if we have this neckline broken to the downside, that makes that reversal pattern a matured one. So when we have a breakdown of the neckline, that confirms that we are having a reversal pattern. Remember, when we have structures like this where we have higher lows, we are not selling. Obviously, we are not going to sell at that point because it's not yet matured. Is until when we have the breakdown of that neckline here, then we know that we have a mature reversal pattern. So in this case, we are talking about we have quite a lot of reversal patterns, definitely. We have quite a lot of them. We have the head and shoulder pattern, we have the rising wedge, we have the double top structure, we have um, rectangular reversal patterns as well. So we have quite a lot of them. So in this instance that I'm explaining here, this is looking like a double top structure. So when we have a breakdown, then we confirm that we have a mature reversal pattern. And for me, well, some people take that trade outrightly. So it depends on your kind of trading. So that is why I said, the first day I told you, I said something that I will not impose my trading style on you. My job is only to look at how you trade and be able to pinpoint what you need to do so that you can also find your own style of trading. So in this kind of instance, for instance, where we have a neckline, some people actually sell right away as long as price breaks down that structure. They sell outrightly and move their stop loss accordingly when price breaks down that structure. But for me, I prefer the market to give me further confirmation. And I want to see a retest of a structure, that is, price comes back to do the retest of that trend, of that neckline. It's go climb a little bit up. But one thing I want to see is price coming within that area, after which I look for selling pressure on lower time frame, then I could join that decline to the downside. So that's how I do my own trading. We are different, so we are not the same. So you could actually take your own right away from that level. Some people do that. And for me, I will just wait for price action to come back, do a retest of my structure before I join the decline. And if price does not come back to do the retest of that structure, I will pass that trade. I don't care. There are quite a lot of opportunities in the market. So if I miss this one, it doesn't mean that I will not get another opportunity to join that decline. All right.
Yes, sir.
So I hope my
Yes, sir.
explanation here is very clear.
Yes, sir. Yes, sir. Yes,
Do you
sir.
have any questions before we move on? Do you have any questions before we move on?
Yes, sir. Yes, sir. So identifying like what you drew on the chart right now. Okay, series of higher highs and higher lows, higher highs and higher lows. For me to buy from this market now, so definitely I need to wait for another retest to retest the previous high with structures like double bottom structures before I can actually buy from this angle if eventually I do not see a reversal structure forming at this range.
I'm trying to understand what you're trying to say there.
Okay, like I did not see any reversal structure forming, like a reversal structure that want to pull the price to the downside. So for me to buy, if I see a retest of the previous high, since it's a higher high and higher lows for me to buy. So for me to buy, if I do not see a reversal structure, I need to wait for the market to give me another opportunity, maybe retest of the previous high before I can buy again, or in case I miss all the opportunities I see. What if I see a retest of the previous high? Can I be able to take the advantage?
Of course, you can. Now, that is why it is trading is not a rocket science. Is not um what worked for me yesterday will work for me today. So one
Yes,
has
sir.
to be very dynamic. You have to be
Yes,
able
sir.
to flow with the market. You have to
Yes, sir.
be very versatile. You're not supposed to be rigid, because the market is the one that is talking. The market is the
Yes, sir.
one that is dictating what is going on. So our job is not to make any decision. Our job is not to force or impose what we think on the market, but instead our job is to listen to what the market is saying. And the only way we
Yes, sir.
can listen is to be patient enough, be attentive to see what is really going on in the market. Now, like I said
Yes,
here,
sir.
we saw a situation where price came back into the previous high here, and then it was unable to break the previous high here. So we have something that we call the lower high around here. And that is a
Yes,
sign
sir.
that sellers are coming in the market. So at this point,
Yes,
we
sir.
have what we call a lower high, which I will label as LH at this point. So when we have a lower high, that is, price was unable to break the previous high, definitely we want to be seeing that as a sign that sellers are actually coming in, and this could actually lead into a momentum shift in the market.
Yes, sir.
Even though we are seeing something like this, we still need to be very patient to map out our structure. And like I said, if we have a reversal pattern, we start seeing a reversal pattern, we start seeing structures lining up to form a reversal pattern, the next thing we want to do is to identify the neckline that will be serving as our yardstick. And at this point, that is why I identified this level here. I use this purple line to identify the neckline because this was the previous low where price action tested the previous high, which is here. So now when we got here, we saw this move to the upside. Probably, okay, when we look at this pragmatically, from you are trading live, for instance, you would have bought at this point because we are on the uptrend, right? And you would have bought here, definitely, obviously, we will have bought here. Probably you saw buying pressures on lower time frame, you bought here, and price continued to the upside. But you start seeing a situation where price was unable to break the previous high. That is, the high here was not broken. And what we saw, we start seeing selling pressure, probably on your 5 minutes time frame, we start seeing selling pressure around this area. So it gives us a sign that this previous high will not be broken at this point. So we have a situation where this might likely turn out to be a reversal pattern. We are not sure yet at this point when price is here. We are not sure yet. So the only way we are going to be sure, that is why we were able to identify the neckline here, draw it out, figure it out, so that we can use it as our yardstick for trading opportunity. So that is why we identify the neckline. And from a theoretical standpoint, whenever price breaks down that neckline, this whole structure here now becomes a mature reversal pattern. So now, like I was explaining earlier, I said some people will actually have set their sell stop right around this area to sell right below the neckline to the downside. Some people will have done that anyway. And like I said, we are different. We all have our own style. We all have our own temperament. We are not the same people. And obviously, the way I trade will be different from the way you trade. You might be an aggressive trader. I might be a positional trader. So it depends. So like I told you, I said, for me, I actually don't join this kinds of opportunity, the outright breakdown of that structure, because it could turn out to be a false breakdown, after which we might be seeing situation that will send price going to the upside, shaking out all the people who thought selling opportunities coming in at this point. So because of this kind of scenario and based on my experience in the financial markets, so I've decided that, okay, when I see a breakdown of the structure, I'm not going to be selling until the market gives me further confirmation, and that will happen when I see a retest of the structure. So when I see a retest of the structure, it can come right below that level, or it can even climb above it. But the most important thing I want to be looking out for on my lower time frame, it could be your 5 minutes, it could be your 3 minutes time frame, your 10 minutes time frame, whichever it is. The most important thing we want to be looking for is selling pressure around this area. So we start seeing selling pressure around this area, then I know, at this point, buyers appear to have lost the grip in this market. So when I start seeing selling pressure around this area, just right around the neckline area, then I want to place my sell stop right below that structure to take advantage of that move to the downside. So that is how I identify selling opportunities when we see reversal structures like this. But it's okay. Some